Hello my precious friends, I really hope that you're doing great. Welcome to today's class. It's our 13th lesson on a given Form 3 mathematics topic called Commercial Arithmetics 2. So we are looking at our fifth aspect on this particular topic, which is called the income tax. So let's start by defining what we mean by income tax. Now, what is income tax? So income tax is simply a direct tax. It is a direct tax that is imposed, a direct tax that is imposed on income, that is derived or generated from either a business, employment, rental income. We can also have dividends, interest, etc. So that is what we are calling the income tax. So simply a direct tax that is imposed on income that is generated or derived from either a business, an employment, rental income, dividends, or maybe interest. Now, under income tax, there are a few terms that we need to familiarize ourselves with. The first one is what we call the gross income. Gross income is also called total income. It is also called the gross pay, also called the gross salary, also called the gross profit. Now, what is gross income? So gross income simply refers to the total amount of money received without any deductions. So for example, let's say for the case of a business, whenever we consider the amount of business that is being generated from the daily operations without any deductions, then that is what we are calling the gross income or the total income. For the case of an employee, we can talk of the basic salary plus all the allowances that that particular employee is receiving. That is without considering or without reducing any deductions from that particular earning or income. So gross income or total income, also called the gross pay, gross salary, or gross profit, is simply the total amount of money received by an individual or a business without any given deductions. So in terms of formula, we can say that the gross income or the total income or gross pay or gross salary or gross profit is given by basic salary. This one is specifically for the case of an employee, basic salary, then of course plus all allowances that that particular employee is enjoying. Remember, whenever you see the word basic salary, you always need to remember that basic salary is always charged. This one is paid or charged, or you can say it is paid on monthly basis. It is paid on monthly basis. So whenever you see the word basic salary, this is the amount of a salary that an individual is receiving on a monthly basis. But when we talk of annual salary, the word annual means on yearly basis. So this one is usually paid. It is paid on yearly basis. So that's the difference between these two. So gross income is equals to, you take the basic salary or the annual salary, then of course you add all the allowances. Remember, when you talk of all the allowances, we are meaning the allowances that are taxed, and also the allowances that are and the allowances that are non-taxable, or the allowances that are non-taxable. Remember, it is possible to convert basic salary into annual salary. Similarly, it is also possible to convert annual salary into basic salary. For example, if somebody was earning a basic salary of 10,000 shillings, let's say this was a basic salary, then you wanted to convert this one into annual salary, you simply multiply by 12. Because the 10,000, this one means in 1 month. This one is on a monthly basis. So if you want to convert it into a year, you simply take 10,000, then you multiply by the number of months present in a year. So of course, this will give us 120,000 shillings. then this one is what we are calling the annual salary. So annual is simply on a yearly basis. Therefore, we can say that gross income can also be given by the basic salary, which can also be annual salary. Then you add taxable allowances plus non-taxable allowances. So remember, there are allowances which are taxable, other allowances are not taxable. So of course the question will specify whether the allowances are taxable or they are not taxable. So for example, we can have allowances such as commute allowance. We can also have maybe house allowance. We can also have medical allowance, etc. So we are saying that examples of allowances could include medical. We can have medical allowance. We can have commuter allowance. We can also have house allowance, which could be charged on nominal rent or non-nominal rent. So those are examples of allowances. So allowances are simply the extra amount that somebody or a given employee is added on top of his or her basic salary. Let's say somebody had a basic salary of 30,000 shillings, then he's given a house allowance of, let's say, 5,000 shillings for the rental, for the rent. Then maybe he's given what we call the medical allowance of, let's say, 10,000 shillings for treatment of any illness that could occur during the working period. You could also get transport allowance, or what we call the commute allowance of, let's say, 3,000 shillings, let's say, per month. Now, that is what we are calling the gross income. So for the case of gross income, we add all the allowances, whether the allowances are taxable or non-taxable, we add all of them. Now, other than gross income, we also need to familiarize ourselves with what we call the taxable income. Now, taxable income is simply the portion of gross income that is subjected to taxation. So in short, the only difference between a gross income and taxable income is that for the gross income, we consider both the taxable allowances and the non-taxable allowances. But for the case of taxable income, we strictly only consider the taxable allowances. We are only interested with the amount which is subjected to taxation. Therefore, taxable income is the portion of gross income. It is part of the gross income that is subjected to taxation. So that means if you are given a question and the question does not have what we call a non-taxable allowances, then for that particular case, it simply means that the gross income will be equal to that is the taxable income. Therefore, a taxable income can be given by the basic salary, which can also be annual salary. We said basic is monthly, annual is on a yearly basis. Then, of course, you add the strictly taxable allowances only. So we are not considering the non-taxable allowances. So given the gross income, you can also compute taxable income by simply taking the gross income, then minus the summation of the special benefits and the non-taxable allowances. Remember, special benefits could include things such as the nominal rent. So an NB to consider here, we are saying that all special benefits are deductions that are taxable. A good example is the nominal rent. Remember, we are saying that the gross income in some cases, it can be equal to the taxable income. It can be equal to the taxable income. So the gross income can be equal to the taxable income if and only if. So we can say only if they are equal, only if there is no non-taxable allowances. If there are no non-taxable allowances. So if you get a question that does not have any non-taxable allowances, then for that case, the gross income will be equal to the taxable income. So in short, if you compare these two formulas, the basic salary plus taxable allowances, you compare it with the basic salary plus the taxable allowances, then plus the non-taxable allowances, you realize that the only difference between the gross income and the taxable income is actually the word non-taxable allowances. So if in a question there is no non-taxable allowance given, then the gross income will be equal to basic salary plus taxable allowance. You can also see that taxable income will still be equal to basic salary plus the taxable allowances. If there is no non-taxable allowance, then for that case, the gross income will always be equal to the taxable income. However, if non-taxable allowance is not given, then the taxable income will be equal to gross income minus the non-taxable allowances. Now, there's something we're calling the special benefits. We've given an example of nominal rent. Now, what do we mean by the word nominal rent? That is in layman's language. So let's say a certain employee is getting a basic salary of let's say 30,000 shillings. Then this particular employee is housed by the employer. Let's say the person is working in a government institution and the government is giving him the house, which is capped at 15%. So that means this particular person will be enjoying what we call a house allowance. House allowance, which is always charged at 15% of the basic salary. So if you take 15% of the basic salary, which is 30,000, so of course 2 zeros will cancel out. So this one will give you 15 times 3, that is 45. So this will be 4,500. So it means that this particular person will be enjoying a house allowance of 4,500 from the government. Therefore, if you take basic salary plus allowances that this particular person is enjoying, he will be enjoying 30,000 plus 4,500 as a house allowance. So it means that the total earning of this particular person will be 34,500 shillings. However, this employee decides to live in a house whose house rent, let's say, is 5,000 shillings. Remember, the government is only catering for 4,500 as the house rent. But this person decides to live in a house whose rent is 5,000 shillings. Therefore, it simply means that whatever the government is providing as the house allowance is not enough to sustain for the rent required by this particular employee. Therefore, for this particular employee to pay the landlord, the employee will be forced to pay an extra 500 shillings. So that 4,500 plus 500 shillings, the employee will feel a rent of 5,000 shillings. So this extra amount that the employee takes from his own pocket to fill up the rent, which is provided by the government, this is what we are calling the nominal rent. This is what we are calling the nominal rent. And that is why we usually say that nominal rent is a deduction. Remember, deduction is money that is getting out of your pocket. So because the government had budgeted for 15% of the basic salary as the house allowance, which is equating to 4,500, but the employee is being housed by the government, and that particular house that the employee is living in is its rent. The rent is supposed to be 5,000 shillings. So it means that on top of 4,500 shillings, the employee is supposed to add 500 shillings from his own pocket to cater for a total rent of 5,000 shillings. So this extra amount that the employee is taking from his pocket to add to the house allowance provided by the government, so that to fulfill or to fill the total rent of 5,000, so this extra amount of 500 shillings is what we are calling the nominal rent. So a nominal rent only arises if the employee is living in a house whose rent is higher than what the government is providing as the house allowance. So remember, this could be calculated for any amount. Let's say for the person who is earning, let's say 60,000, 70,000, 100,000, and so on and so forth. Now, if a situation arises whereby the employee is living in a house whose rent is 4,500 shillings, then in such a case, there will be no need for nominal rent. So if the employee decides to live in a house worth 4,500 shillings as the rental, that is the rent to be paid, then in such a case, there is no nominal rent. So a nominal rent will only arise if the employee is living in a house whose rent is higher than what the government is providing as the house allowance. So remember, a nominal rent could occur in a situation where the employee is housed by the company or let's say the government in that particular case. Next, we look at what we call the gross income. So the gross income, that is especially when the employee is housed at a nominal rent. That is, let's say the employee is housed by the employer. Let's say the government is the employer. So the employee lives in a government house, then he's paying some nominal rent, meaning that the house allowance is not equal to the rent that that particular employee is supposed to pay. Let's say the house allowance is 4,500 from the basic salary. Then the house rent is 5,000 shillings. So there's an extra 500 shillings which is being paid by the employer from his pocket to fulfill a rent of 5,000 shillings. So this is a case whereby we are saying that the employee is being housed by the employer at a nominal rent. So if such a situation occurs, then the gross income will be equal to, you take 115% of the basic salary, then you subtract the nominal rent, then you add all the allowances. Remember, we are talking of gross income. Therefore, we are considering both the taxable allowances and the non-taxable allowance. Remember, this statement can also be rewritten this way. It's just like we are taking 15% because the house allowance is always capped at 15%. That is for the Kenyan context. So you take 15% of the basic salary, then you add the basic salary. You add the basic salary. Then of course you less the nominal rent minus the nominal rent. So we are minusing the nominal rent because this is money that the employee is taking from his own pocket. Then of course we add the all allowances. We add all allowances, meaning both taxable and the non-taxable allowances. So for example, in this case, what we mean is that let's say this person was earning 30,000. So we will take 15% of 30,000. Remember, we had already computed it in the previous page. So it's like you are taking 15% of the basic salary, which was 30,000. Then you add the basic salary, which is 30,000. Then you less the nominal rent. In that case was 500 shillings. Then let's say the taxable allowances, let's say they were equivalent to 10,000 shillings. So this is how we will compute our gross income. Now, if you closely consider the working of this particular part here, remember 15%. If you take 15% of 30,000, it was giving us 4,500 shillings. Then if you add to 30,000, this will give you, if you take basic 15% of basic salary plus basic salary, this will give you a total of what? This will give you a total of 34,500 shillings, which is the same as saying if you take 115% of the basic salary. Remember, if you take 115% then of the basic salary, which is 30,000, the two zeros will cancel out. If you take 115 multiplied by 300, you'll still get 34,500 shillings. So in short, this one is just a shortcut of calculating 15% of the basic salary. Then you add the amount of the basic salary. So this is a short form of 15% of the basic salary plus the basic salary that was being charged. So you simply take 115% of the basic salary, then you subtract nominal rent, then plus all allowances. Now remember, in this case also, the basic salary is like representing our 100%. Then you are adding 15%. So if you take 15% plus 100%, you'll get a total of what? 115%. That is where we are getting the 115%. That is the 15% plus the 100%, which is the basic salary. The 15% of the basic salary, you take 100 plus 15, you'll get 115%. So you take 115% of the basic salary, it will give you a value equivalent to 15% of the basic salary plus the basic salary. So that is what we call the gross income. Now we can also differentiate for the case of gross income. Of course, when the employee is housed at a nominal rent, it can also be given by 115% of the basic salary, then minus nominal rent, plus taxable allowances, then plus non-taxable allowances. Notice that what we have done here, we've just combined if you take taxable allowances plus non-taxable allowances, this will give you what we call all allowances or the total allowances. So in the first case, we've separated these two, but in the second case, we've separated taxable allowances and non-taxable allowances. However, if you combine these two, they will give you the all allowances or the total allowances. So that simply means that the gross income can also be given by the following. So we can also give it this way. So we can talk of, so for this case, we can talk of the gross income. It can also be given by, you take 15% of the basic salary, then you add the basic salary, which is a combined statement for this first part. This one is equivalent to this part here. Then you less the nominal rent. You less the nominal rent, which is this part here. Then you add the taxable allowances. Which is this part here. Then you add the non-taxable allowances. So this is that formula here. So taxable income, when the employee is housed on a nominal rent, will be given by 115% of the basic salary. Then you subtract the nominal rent, then you add the taxable allowances. Remember, whenever we talk of taxable income, notice that we are only talking of taxable allowances. But whenever we talk of gross means total. Whenever we talk of gross income, then we have to consider both taxable allowances and the non-taxable allowances. So remember, this formula can still be rewritten as you take 15% of the basic salary, then you add the basic salary, then you less the nominal rent minus nominal rent, then of course you add what we call the taxable allowances. You add the taxable allowances. So the difference is that for taxable income, we consider taxable allowances only. For gross income, we consider both taxable allowances and the non-taxable allowances. Next, we look at another term called the gross tax, which is also called the income tax, also called the tax payable or the total tax or the tax charged. So this one is simply calculated by adding all the taxes got or gotten in each tax bracket. Remember, tax bracket is also called a band or a slab. That is during the process of taxation. Therefore, the gross tax will be equal to the tax gotten in the first slab or first bracket or first band, plus the tax in the second band, plus the tax in the third slab or third band or third bracket. Next, we look at another term called the payee. So the payee, also called the net tax or the net tax payable, also called the tax payable or simply the net tax paid, also called the tax paid after relief. I want you to notice that for the case of payee is always expressed on monthly basis. It is always per month. But for the case of net tax, this one can be it can be annual. It can either be annual or on monthly basis. So whenever you hear the word payee, just know that the amount is per month. But whenever you hear of net tax, it can either be expressed per year or annual, or it can as well be expressed on monthly basis. Now, the payee or the net tax is given by, you take the gross tax, which is also called the total tax, then you less the total relief. So total relief could include the summation of personal relief plus insurance relief. If the question only has a personal relief, then that means the payee will be given by the gross tax. Gross tax, then you less the personal relief. You less the personal relief. But if the question has two or more reliefs, then you have to add the total reliefs. You take the personal relief plus the insurance relief for you to get the what we call the payee or the net tax or the net tax payable or tax payable or net tax paid or simply the tax paid after relief. So whenever you take the total tax, then you less the total relief, you get what we call the payee or the net tax or the tax payable. Next is what we call the total deductions. Total deductions. The first deduction is always the net tax, which is also called the payee. We've said net tax can be either monthly, on monthly basis, or annually. But for the payee, this one is strictly on monthly basis. So whenever you're given a value, then you are told it is payee, but they do not specify whether it is yearly or monthly. Just know that if it is a payee, it is always monthly. But for the case of net tax, they have to specify because it can either be monthly basis or annual basis. So total deductions is given by the net tax or the payee. Then you add other deductions. So other deductions could include the special benefits. We give an example of nominal rent being a special benefit, the nominal rent. Then of course, you can also add the basic benefits. So an NB, we are saying that special benefits are deductions that are taxable. A good example was what? The nominal rent. Then basic benefits, what we are calling the basic benefits, these are deductions that are non-taxable. That is, they are not subjected to taxation. A good example is the National Social Fund, insurance premium, retirement benefits, shares, loan recovery, for example, HELB, union dues, and also other bills. So we look at examples of basic benefits. One, we have the National Social Funds, e.g. we have the NSSF, we have the NHIF, we have the SHA, we also have the SHIF. Insurance premium is simply the amount paid to insurance companies in exchange for the insurance cover. A good example, we can have health insurance cover. We can also have the car insurance cover, such as the Madison, etc. Then the monthly insurance premium, if it exceeds a maximum limit, we'll look at an example involving a maximum limit, which is always given as, let's say, a percentage, maybe 10% or 15%. You'll understand this part better when we check at a practical example. Another example of basic benefits, we have the retirement benefits. For example, annuities. Annuities are usually paid on a yearly basis, that is annually. A good example is the pension scheme, periodic payments. We can also have the widow and children pension scheme, abbreviated as WCPS. We have the provident fund lump sum payment. We can also have the shares as part of the basic benefits. You could be paying shares in cooperative shares, equity, KCB, Safaricom Limited, etc. Then another basic benefit could include loan recovery, such as the HELB, repayment loans. You can also have bank loans, SACCO loans, etc. You can also have union dues. For example, for the case of teachers, we can have the KUPPET and the NAT payment. You can also have the bills. Now, the bills in this particular case could represent the water bills. We can also have the electricity bills. Then we also look at the last aspect, which is called the net salary, also called the net income or the net pay. So net salary is simply the individual's income after taking taxes and the deductions into account. So we are saying that the net salary or the net income, also called the net payee, can be given by the gross income, also called the gross payee. Then you less the total deductions. Then net salary or net income or net payee is given by taxable income. Then you less the total deductions. Notice that for this particular case, the gross income can be equal to the taxable income. These two can only be equal if there is no non-taxable allowances. So if a question has non-taxable allowance, then net salary will be given by gross income or the gross pay minus the total deductions. Because remember, gross pay takes into account both the taxable allowances and the non-taxable allowances. But if the question only has taxable allowances, that is, if there are no non-taxable allowance in a question, then for this particular case, the net salary or the net income or the net pay will be given by taxable income minus total deductions. Remember, taxable income only takes into account taxable allowances. It only takes into account taxable allowances. But gross income takes into account both taxable allowances and non-taxable allowances. So for the case of net salary, if there is non-taxable allowance, here we talk of gross income or gross pay minus total deductions. If there are no non-taxable allowances, that means that we only have taxable allowances. Then we talk of taxable income, then minus total deductions. Another point to note is that total deductions will be equal to the payee. It will be equal to the payee if there are no other deductions. If there are no other deductions. Yeah, you can get a question where there are no other deductions. So if there is no any other deductions, then total deductions will just be equal to the payee or the net tax. Thank you very much for accompanying me until the end of this particular lesson. I do not take it for granted. In case you are new to the channel, kindly hit the subscribe button and also turn on the notification bell so that whenever I upload a video, you'll get notified. Until next time, this is Kind Tuition Academy. Thank you very much.